Hello and welcome to Switzer Investing Insights, brought to you by nabtrade. And today we want to look at the 2020 share market outlook. Paul, I think looking at this sort of thing, we're going to work out whether stocks are going up or down, big caps or small caps, will they do well, which sectors are you keen on, and maybe a stock tip or two.
Well, let's start with the up or down, Peter, and I think it's important to realise we're in the 11th year of a bull market, which started back in 2009. The US is still leading our market. We're at all-time highs. I reckon you've got to stay long, Peter, because the trend's your friend, and we keep saying that. Does that mean we have a great year in 2020? Well, look, I think the market can go up. I'm going to get a little more wary as we head to the US election, but I think you stay long for the short term.
Yeah, I'm in the market will go up camp. I think it'll be pretty positive around to March or April. Then for May, in that middle of the year, which historically is not great, so in May go away, the old saying goes. I think until the election's over, if Trump wins, I think the market could like that. So I think the consensus view is that S&P 500, which is leading our market, is going to be up about 5%, throw in dividends, say 8%. I think the Aussie market will probably be at least up 10%. And I do think that it's the second half of next year is good for growth. Our market will really like that.
And you think the Aussie market can do a lot better than the US market, or are we really just going to sort of bumble along and follow the US?
We'll only do a lot better if the growth in the second half is bigger than expected. If that happens, I think a lot of our companies that have been struggling will start to do better, and that will be reflected in their profits and therefore their share price. There are times when we do better than the US market. It's been a long time, but I think it's probably it's a possibility.
Well, let's move on to big caps or small caps, Peter. I'm a big caps fan, as you know. Small caps have struggled, and I still think maybe 2020 is still the year of the big cap. I just caution about the outlook for the resources sector, which does influence part of the small caps market. But this is sort of a lot more people talking about so-called value stocks down there, Peter, aren't they?
Yeah, and I think the value fund managers could have a better time because those small cap stocks haven't rocketed up in value, and they go looking for stocks that they think where the market's valuation is less than what their true valuation is. So if the optimism's around, a good value fund manager might have a much better time, and they've struggled for the last 3 or 4 years.
Yeah. Okay, let's move on to the sectors, and we have 11 industry sectors. On the screen in front, you can see the sectors. Their current weighting is part of the ASX 200, and a sort of a position I have, which is either overweight, which implies I like them more. Yeah. Index weight, don't really have a strong view, and underweight. You'll see I've got sort of 2 for the overweight part, consumer discretionary. That's sort of driven as much by the fact that we've got low interest rates, we've got improving housing market. Yep. That should be good for the sort of the companies where consumers need to spend.
Yeah, JB Hi-Fi,
retail,
Harvey Norman, Nick Scali.
Some of the other things, some of the gambling, some of the other areas that sort of flow from that simply because of consumers are a little more confident. Now, we haven't seen consumer confidence rise, but we do know the conditions are right for it, and they've actually been doing all right. The other one on the overweight is healthcare, and that's more on a sort of a view that, look, it just has the tailwinds behind it, and we have some absolute fantastic companies. Now, I know healthcare, has been the best performing stock in 2019, 2018, 2017, the last 5 years and the last 10 years, and at some stage that's got to run out. But we have some global leaders in the CSL, ResMeds and Cochlears, and I just think the market has to buy those stocks because they just are the ones that are able to grow revenue.
Yeah, and when you think about it, when an advisor puts together a portfolio for a new client, those sorts of stocks are going to have to be in there because CSL, for example, is our second biggest company now. Yep. So, I totally agree with you. The one area I'm surprised, Paul, is you've got index weight on financials because you are a bit of a financial fan.
I love to be more bullish on the major banks in particular. Financials does include insurance companies and fund managers and a few others, but it is still largely the 4 major banks. A courageous call, Peter, is wanted to go overweight them.
You should have done it, Paul. You should have done
I'm not quite courageous enough this year. I think they are going to come back. Yeah. The yields are too high. Sure, we've got to get through all the mess of the remediation, but and we do need a little bit of credit growth to help, right? But look, there are signs here. We've had some data suggesting there's a bit of pickup in the housing market with mortgages, so that may not be as bad for some of the banks. So that would be a courageous call. The one I'm underweight, Peter, I'm underweight consumer staples. That's mainly because I think the major supermarkets, the Coles and the Woolworths have really had a great run and are pretty expensive these days. I think that's still a tough sector. Materials, that's more on the to do with our major iron ore companies, Peter. Again, they've had a great run, but Vale the big Brazilian producer is going to come fully back online in 2020. I think that's going to make pressure.
Yeah.
And utilities, which has been a lagger this year, but also just because of power prices, I think that sector's too small. So, look, that's sort of a view on the sectors.
Yeah, and I basically agree. Let's go to the final one, Paul, stock tips.
Yeah, well, look, here's three to look at. I mean, one is a gunner stock. That's Woodside, right? It's always going to be a big achiever. It never has really delivered. No. If you've been a Woodside shareholder, you know exactly what I'm talking about.
At least it pays a dividend.
At least it pays a dividend. I'm starting to warm to Woodside. The oil price is good. Now, Woodside is more dependent on the LNG price, but that's a sort of derivative of the oil price. They're linked, so I'm warming to Woodside. Also warming to Santos, because I've just noticed that this oil price ain't going down, folks. Yeah. And OPEC's done a remarkably good job of managing the price. And then thirdly, in the banking sector, a stock that's unloved, friendless, probably won't re-rate in the short term is Westpac. I'm going to stick my neck out and say that stock is too cheap compared to its majors. So they're three sort of major cap tips for 2020. What about you?
Yeah, I like Mineral Resources. It's a stock that lots of people, smarties, fund managers have all liked. It's got upside when you look at the consensus view on the company. As a foreign company, I like Spotify. Yep. I actually use Spotify, and apparently Asian economies are starting to pick up on that sort of thing, and the company's getting its act together. And I think HM Milk's had a really good run, but a lot of fund managers do like it. It may well become that kind of stock that everyone has to buy. Maybe you buy it on the dip if there's any market volatility experiences, but they're the three I like. That's our 2020 market outlook. I hope we're on the money, and we hope you're on the money in 2020 as well. Thanks for joining us for Switzer Investing Insights. See you next year.